Over the last decade, from 2015 to 2025, Hong Kong's housing market has gone through major fluctuations. From the graph, we can see that prices grew steadily until 2018, then declined sharply. The house price index table shows strong drops of -15% in 2022 and around -7% in both 2023 and 2024. Moving forward, the number of new dwellings fell during the pandemic but recovered in 2024, reaching about 24,000 units, mostly under 40 square meters, showing a limited housing supply. Moving to rents increased sharply until 2018, then dropped during 2020 and 2022, and slightly recovered towards 2025. The average rents table confirms this recent rebound, with increases between 3% and 9% in 2025, particularly for smaller apartments, reflecting renewed demand after years of decline. Finally, this chart shows Hong Kong's fall in 2025, a steeper decline than China or Germany, confirming Hong Kong as one of the most unstable housing markets worldwide. On the demand side, housing serves as both a necessity and investment asset. Between 2015 and 2017, 2% mortgage rates, strong GDP growth, and rising mainland investment spurred speculative buying, especially in the luxury segment. About 1/4 of all mortgages between 2016 and 2020 were for investment, not occupation. Prices have outpaced incomes dramatically. Homes now cost about 16.7 times the median income, and the price-to-rent ratio has doubled from 20 to 40 since 1999. This makes Hong Kong the least affordable housing market globally. Demographic shifts reinforce demand. Western expatriate outflows have been offset by affluent mainland professionals and students, who increasingly rent private accommodation. Hong Kong now ranks second on Knight Frank's Prime Global Rental Index, 2025. Many investors also convert residential units into short-term tourist apartments, capitalizing on the 35 million yearly tourists, their higher incomes and willingness to pay. Hong Kong's housing market reflects a cycle of land scarcity, speculative demand, and government intervention. Despite ongoing reforms, structural limits keep the city among the least affordable in the world. Only 24% of Hong Kong's land is developed, and just 7% is zoned for housing, creating one of the world's most inelastic housing supplies, with an elasticity of 0.009. Between 2015 and 2017, completions averaged 16,000 to 18,000 units per year, far below demand, leading to aging stock, rooftop slums, and soaring prices. Supply has been further slowed by vacancy taxes, long rezoning procedures, and pandemic-related delays from 2020 to 2022. The government plans to release 3,000 hectares of land over the next decade, but such projects take years to materialize, leaving short-term supply extremely tight. Investment trends are closely tied to policy. Under the public leasehold system, the government owns all land, influencing the market through sales and lease terms, sometimes sparking speculation about manipulation and developer-section collusion. Fewer land sales and fiscal uncertainty have made investors cautious, but policy shifts are reshaping sentiment. Cooling measures introduced in 2010 were lifted in 2024, boosting new project launches and raising sub-40 SQM unit completions by 38% to 10,794. Still, high USD-pegged interest rates have kept prices subdued. Transactions rose 23%, rents stabilized, and yields averaged 3.7%, roughly neutral after inflation. Despite some correction, affordability remains stretched. Hong Kong's housing market remains defined by rigid supply, speculative demand, and policy-sensitive investment. Even with new land plans and easing regulations, the imbalance between supply and demand continues to shape the world's most unaffordable housing landscape. Taxes and subsidies have been used in the past. As an alternative, we think the government should try and implement supply-side policies by easing structural supply constraints, which will lead to an increase in the supply of housing. In Hong Kong, large portions of its land are restricted areas such as for the military, making them unavailable for the construction of housing. If legal paperwork decreases, then new units of houses would be built and consequently market rent and prices would fall in the long run, therefore lowering the shortage gap. However, this has a very long implementation land, and in Hong Kong, the Big Four developers also would most likely dominate land auctions, which means that the supply-side policies might not work into lowering the prices as the market acts as an oligopoly.